Good afternoon, everyone. Greetings from Geneva, Switzerland. My name is Tony Consul. I'm the head of communications here at IATA, and I'm joined by our chief economist, Brian Pearce. Thank you for joining this briefing, which is part of our IATA Global Media Days, as well as the annual general meeting. The focus for today is on the industry outlook. As you can imagine, this is a very difficult situation for airlines with the COVID crisis. Brian, our chief economist, has an update on the industry outlook, which he will present through some slides, and then we'll take questions via the chat function. We are also distributing at this point a release for your reference, so that should be arriving shortly. If you don't get the release, please send a message to corpcoms@iata.org, and we'll try and arrange for you to have access to that immediately. So without further ado, I'll turn over to Brian, who will take us through the Outlook presentation. Brian.
Thank you very much, and good day to everybody. Let me start this assessment of the outlook by noting the scale of the hit to the aviation industry from COVID-19. If we look at global air travel measured by passenger kilometres flown, we're expecting that 2020 will end with RPKs down by 66% on the previous year. And that's by far the biggest shock the industry has experienced in the post-World War II years. And clearly, when you compare it to the shocks of 9/11 or the global financial crisis, it's enormous. In fact, it could have been catastrophic for the airline industry, given the scale of the loss of passenger revenues that we've seen. But for governments stepping in with $173 billion of aid, of cash, to keep airlines on life support. So clearly governments in most regions, not all, have recognised the importance of aviation to their broader economies. But one issue with that aid, you'll see from the dark blue bars, is that more than half of that aid has been in the form of debt. And that's going to be an issue for the restart of the industry. And if we look at the debt that the industry has accumulated from that government aid, but also from obtaining cash from the banks and the capital markets, you can see that that's added more than $220 billion of debt to 2019 levels of 430. So that's more than a 50% rise in debt. And the industry was already very heavily indebted before the crisis. That will be a burden during the restart. And some airlines might find that impossible to deal with. And the restart itself has been disappointingly weak. We saw some recovery of air travel in global passenger kilometres flown in the late summer. But as we move into the fourth quarter, that is stalling. And that's in contrast to what we've seen with the economy outside of travel and tourism. Global industrial production is now actually within about 3% of where it was before the crisis. And that actually has driven a much stronger air cargo business for the airlines. And by September, cargo volumes were only 8% down on previous year levels. And what we've seen outside of the aviation and tourism industry is that the confidence of businesses has rebounded really sharply in a V shape. So this is the confidence of companies in the manufacturing and the services sectors of major economies. And you can see that the readings up till October for some very significant economies are still very high. They're above pre-crisis levels, supportive for air cargo, with the exception of Europe, which of course has gone into a second lockdown. And this has also, I think, helped domestic air travel as well. Although, as you can see from the experience of different domestic air travel markets, it's been a very diverse year. The Russian and the Chinese market have more or less fully recovered, although note that Russia is now coming under downward pressure because of the surge of coronavirus cases there. But contrast that full recovery with the US experience. The US is the biggest domestic market that's really seeing disappointingly slow recovery, and markets like Australia, where there's been barely any recovery at all. One of the reasons, of course, is the different experience in controlling COVID cases ahead of a vaccine. And it's been very disappointing, and particularly comparing the outlook today to the one we released in June, we had been expecting more success in controlling the virus, and that clearly has not happened. Outside of countries like China and a few other Asian economies where the virus has been kept under control. But we've seen this extremely sharp second wave in Europe and what seems to be a third wave of new cases in the United States, which has so damaged travel by leading to renewed travel restrictions. And if we look at the international business, where the majority of airline passenger revenues comes from, the grey lines show that the majority of markets have barely moved from those lows reached in April. We've seen very little recovery of international air travel. There were hopeful signs within Europe in the summer, where the travel bubble, the corridors between a number of European countries allowing cross-border travel, generated a significant rise. You know, there is a desire to travel. There is pent-up demand for travel. As you can see, the second wave of cases has now knocked that recovery back, and we know from the bookings data that that's declining very sharply beyond the September data that you can see there. The other market where we have actually seen some improvements is actually travel between North and Central America. We think that that's because in a number of Central American countries, borders have been open, not with quarantine, but with testing requirements. And just as an example of the importance of getting in place a testing regime instead of the quarantine requirements that has been the policy of choice to date. This shows the bookings experienced in the first 2 weeks of October for a number of Latin American markets. And the ones in blue are those countries that have opened borders with a testing rather than a quarantine requirement. And as you can see, the bookings are much better than those countries with either a quarantine requirement, like Paraguay, or limited entry. It's much closer to those countries in the region with completely open entry. Testing is a critical policy that could stimulate travel. Of course, we've also had good news with the vaccines. Now there are several vaccines that we know are highly effective, and it looks much more certain. It looks certain that we will see distribution of the vaccine in 2021. But we know that there are likely to be production issues. We know that there are cold chain storage issues. We think that there are likely to be issues of getting full vaccination. Particularly, these factors are likely to make it more difficult to get widespread vaccination quickly in emerging markets. And we factored into our forecasts, and you can see from the blue line here our baseline forecast, reasonably widespread distribution of the vaccine and vaccination in the developed markets in the second half of 2021, but less so in the emerging markets until 2022. So our expectation is that we will see a significant rise in travel next year, perhaps a 50% rise from very low 2020 levels. But as you can see, that still means that the air travel market will only be about half the size that it was in 2019. And it will take several years for full recovery. So what does that all mean for airline revenues? Cargo is looking good, but relatively small. We are expecting to see a rise in air travel, so better passenger revenues. But we still think that the revenues that will be generated, total airline revenues in 2021, will be some 50% below what we had been expecting in our forecasts before the crisis. So with the imperative, the urgent need for airlines to stop burning cash, to stop running down their cash balances, clearly costs need to be downsized to a similar extent. And we know, because of the semi-fixed nature of many airline costs, how challenging that has been and how challenging that will be. But we have seen significant progress already in markets like China, where the domestic market has fully recovered and is so important for the revenues of the Chinese airlines. And the earlier recovery in China is certainly helping Asia Pacific airlines, and you can see from these numbers here, which show the EBIT margin or the operating margin of airlines, that this year we'd expect to see the losses much less in the Asia Pacific region because of that earlier recovery of the Chinese airlines. And indeed, in 2021, we'd expect them to be the best performing region, although the region as a whole, because of the difficulties with international travel, will still be showing a loss. Another region of note is North America. You'll see that before the crisis, in the 5 years before the crisis, airlines in the North American region were actually generating EBIT or operating margins double that of the closest region. They were being very successful financially, and we think that that performance will allow airlines in that region to recover faster than in other regions. So we expect North American airlines to be the second best performing region in 2021. Before I leave this slide, I guess I should note that those regions where there are more emerging markets, where we think there may be some delay in getting either full distribution of a vaccine, which may require cold chain storage, or indeed getting full vaccination, will mean that there will be some lag in those regions in restoring their profitability, and we would expect those regions like Latin America, like Africa, to be showing a poorer performance than some of the other regions next year. What does that all add up to for the industry? You may recall that in June we were forecasting that the industry might lose something like $88 billion. Well, and then $15 billion or so in 2021. We've been forced, because of the very disappointing second half of this year, the very weak restart of the industry, we've been forced to downgrade those estimates, and we now think that net losses for the industry as a whole will total something like $118 billion in 2020. Now, we think that that will be substantially reduced in 2021. We think losses will actually be 3 times smaller in 2021, at just over $38 billion. But I'd note that $38 billion is still, on its own, much more than the industry lost in the previous crises of 9/11 or global financial crisis. But perhaps more importantly, it's not accounting profit or accounting loss that matters for survival of airlines today. It's cash. So, what we expect to happen to cash burn, to airline cash flows, is actually critical for the survivability of airlines over the next 12 months. We know that in the second quarter, cash burn, the rate at which airlines were running down their cash balances, was around about $50 billion. And we also know from the results from the third quarter that there was some improvements a lower rate of cash burn, but not by very much. We still think it was around about $40 billion or so in the third quarter of this year. The news on the vaccine makes us more confident in our baseline forecast for a rebound in travel in the second half and later next year. We think, given the cost reductions that we're seeing, airlines could stop burning through cash by the end of next year. They may even, at an industry level, get to being cash positive by the fourth quarter of 2021. However, from the fourth quarter of this year to that point, and particularly during the tough winter months and the first half, we expect airlines to burn through a total of perhaps $80 billion more of cash. So there's a gap between where they are today and that more improved position towards the end of next year. And that's a problem. Not for the airlines on the left-hand side of this chart. This chart shows our estimates of how long the cash and near-cash assets that airlines had in the middle of the year, so the end of June. If we look at how long those balances of cash would last if they burned through them at the rate we estimate. And you can see the airlines on the left-hand side. There are many airlines with very substantial cash war chests and indeed the ability to borrow more if they need to do so. But that's not true for all, if not the majority of airlines. And we estimate, as you can see, the median airline or the average airline in the middle of the industry had 8 or 9 months of cash left from the middle of the year. So that would last until the end of the first quarter. It's really not until the fourth quarter of the year that we'd expect to see the revenue situation substantially improved. That leaves a gap. That means there's a real risk that we could see airline failures over this time. If we don't see some improvement, which could, of course, come through better travel and better revenues if we get rigorous testing regimes in place ahead of the vaccine arriving.
Great. Thank you very much, Brian. Rather sobering forecast. We will take questions, as I said, through the chat function. We've got a few already, so we'll start to take those in order. The first question asks about industry cost reduction. So what elements of cost do you think the industry can still take out? And what is the role of IATA in supporting its members in taking out those costs?
Yeah. Yes. So one of the points I think we noted was airlines in many instances face costs that are largely fixed around their fleet and around their workforce. What IATA has been working on has been those costs where we can put pressure on governments or on the supply chain to improve the situation. I mean, one of the features that we've seen this year is the collapse of capacity has worsened the cost situation because those fixed costs are spread over a much smaller base. So I think our biggest role is probably to open up markets to enable the capacity to be added so that those fixed costs can be spread and the unit revenues airlines will derive will be more closely match them. So I think it's actually market opening and getting from policies like testing regimes that actually could contribute to airlines in matching their unit costs to the much lower unit revenues airlines will have.
Okay. We have another question asking about industry debt levels. So how severe is the debt that the industry has taken on? And what role do you think governments have in trying to help airlines cope with that?
Well, before the crisis, we had a couple of dozen airlines that were investment grade, that had debt down to 2 times EBITDA, 2 times earnings or less. That's disappeared. Even the pre-crisis strong airlines have had to take on lots more debt, and it'll be a real priority for those airlines that can to reduce that debt, because there are fixed servicing costs, there are fixed repayments that need to be made. It's a real threat to survival. So airlines can reduce that by issuing more equity, but that option is really not open to many airlines. Governments can help, I think, by supporting the viability of airlines restarting operations. We've seen governments in a number of countries providing aid not in the form of loans or debt, but in support to air transport services and connectivity, in supporting ticket sales, or in supporting airlines linked to utilization of seats. I think it's support to the viability of air services that's needed from governments today. And of course, one of the main ways that can happen is through helping to get markets open again.
Okay, thanks, Brian. We have a question about second and I suppose third waves of infection. How have they been forecasted into the outlook?
Well, they're very difficult to forecast. As you have seen from the change in our forecasts from June, when we had hoped that the virus would be under more control and we would have had a stronger second half of the year, which would have limited losses. That hasn't happened. We've seen a surge of virus cases in Europe and indeed more in the US, which has caused us to change our forecasts, both for travel but also for losses in the industry. We can't forecast what's going to happen to the virus. But I think what we can do is push for policies like effective testing, which would mean that the travel industry and governments could work with travellers who we know are not infectious. And indeed, when the vaccine arrives, that will allow more certain projections of the future. But clearly, there's a lot of uncertainty around the behaviour of the virus, as well as the policies of governments, which mean that our forecasts are our best estimates. But obviously, there's quite a bit of uncertainty still.
Okay. Along that same line, how conditional is the improvement to a $38 billion loss next year? How conditional is that on either a vaccine becoming available or governments using widespread testing?
It's completely conditional on that. I mean, we've seen that in the absence of, obviously in the absence of a vaccine, but also in the absence of testing regimes. We've seen in the case of Latin America, these do seem to have been effective in regenerating travel in a way that quarantine has proved to be equivalent to a full travel ban. So, without an effective vaccine, the industry is facing, a very, very difficult future. But I think we can have much more confidence given the announcements that we've had of 2 or 3 vaccines that are effective, and the effort that's going into both the research and the manufacture. I think that we're much more confident now in our baseline projections for travel, which are conditional on those vaccines, but now they look more certain now than they did even a few weeks ago.
We have a question that's asking about the role of domestic markets. And the questioner says, are you expecting short-haul domestic to recover or regional to recover faster than long-haul international? And would that explain or be connected to your prediction of a quicker recovery in North America or parts of the world with large domestic markets?
Absolutely, yes, that's correct. The North American, particularly the US airlines, like the Chinese airlines, have got a very big domestic market, which are very important. That's one of the principal reasons why those regions are doing better than other regions. And I think it's we have seen where the virus has allowed domestic markets have recovered pretty quickly, and I think that shows there's a willingness to fly. And I think also that we've also seen that shorter haul international markets have opened first. We saw that in the case of Europe. Countries, I think, are much more comfortable. And much of this is driven, of course, by health ministries rather than transport ministries in opening up to nearby countries where they know and trust systems and are not afraid of importing cases of COVID-19. So I think that inevitably means that some, if not most, long-haul markets will probably be slower to reopen than the short-haul markets.
Okay, thanks, Brian. We have a question about cash burn, and the questioner asks if the cash burn issue has the potential to disrupt the efficient distribution of vaccines.
I would hope not. Actually, the cargo sector is doing very well. So cargo-only airlines have certainly not been in the situation of the passenger airlines. Cargo revenues have been growing relative to last year. And the first part of the year is typically, at the moment, this is peak season for cargo, because of the supply chains around consumer electronics and all the product releases. And there's a real shortage of capacity today. That capacity will not be used by normal cargo services to the same extent in the first part of next year, which will free that capacity up for vaccine distribution. I think that we've estimated that it'll take about 7,000 Boeing 747 equivalents to distribute one dose of the vaccine around the world to everyone in the population. We think that there is the capacity out there for that, and the industry is in very detailed discussions with a number of parties to make that happen in the first half or middle of next year.
We have a question about the fleet, and particularly the use of different gauge aircraft. So do you think airlines are gaining flexibility when they have smaller aircraft and are flying larger aircraft like 380s or 777s uneconomical in the current environment?
Well, I think they are at the moment, yes. So, the flows between city pairs is much lower, even on those trunk routes. And airlines at the moment are flying where they can make those flights cash positive. And I think that means smaller aircraft where possible. I think it means that we are going to see hubs being of renewed importance, because I think we're going to see fewer city pairs with sufficient passenger flows to justify lots of point-to-point services. Airlines will need to consolidate passenger flows through a hub to make sure those flights are cash positive and also, in time profitable for the airlines. So I think we will see concentration on efficient hubs, and I think that will favour the smaller aircraft rather than the larger aircraft, at least for the next sort of 18 months to 2 years.
Okay. We have a question about business travel. Are we expecting any resumption of business travel in the next year, or is it going to be mainly visiting friends and relatives and leisure travel?
Yeah, I mean, certainly the evidence that we get from talking to the business travel companies travel management companies, is that major business travel companies are not expecting to resume travel very quickly. We've seen that there's clear pent-up demand for leisure travel. Just look at what happened when the UK took quarantine requirements off the Spanish Canary Islands. We saw bookings shoot up. There's clearly pent-up demand for visiting friends and relatives. And I think it's that sort of demand we'll see in the initial stages. I think that business travel will be much slower to recover. And that's an issue for airlines because that means the yields are going to be much lower than they would normally be without the business travel that would typically be a much higher yielding segment of the market.
Okay. We have a couple of questions asking about when we expect the industry to return to pre-crisis levels. So the first part of that question is, in general, when do we expect that to happen? And then the second part is, do we expect that the ultra low-cost carriers or low-cost carriers might do that more quickly than the full-service carriers?
Yeah, I mean, if you're in the cargo business, we'd expect to see volumes and indeed revenues back to pre-crisis levels next year. If you're in the passenger business, it's going to be a much slower process. And certainly for RPKs, we're not expecting them back to 2019 levels before 2024. Passenger numbers a year earlier because of the shorter distances flown. But, the travel recovery, I think, is still, even with vaccines, a number of years rather than months. I think that, as I said, I think that the passenger market will favour those airlines with efficient hubs because we're going to see smaller travel passenger flows between cities. So consolidating those will mean so that the network airlines with efficient hubs, I think, will be successful. But undoubtedly, in this initial environment with price-sensitive leisure travellers and opportunities for those airlines with very low costs that can fly cash-positive flights at a smaller load, will clearly favour the ultra-low-cost airlines who, and we know, a number of them are sort of stepping in to fill the white spaces and taking advantage of the low aircraft orders at the moment.
We have a different dimension to the crisis. The questioner is asking, what role do we see consolidation playing, or what's the potential for consolidation in the industry recovery?
Yeah, I think it's inevitable that we're going to see a more consolidated industry in a 1 or 2 years' time as we move out of this period where governments have kept airlines on life support. We've started to see a number of airline failures, but we're still only at about 40 or 50 airline failures, which is, given the scale of the collapse in revenues, is very, very few. With the build-up of debt from government aid, with the fact that the travel recovery is going to take probably still several years, I think it's inevitable that some airlines will not be able to survive this still very difficult passenger business environment. So I think you will get consolidation through some airline failures. I think you'll also get consolidation through mergers and the sort of joint ventures that have proved successful in the pre-crisis era.
We have questions from two parts of the world focusing on the same issue. One's from Latin America, the other one's from India. And they're both saying that in those regions or in that country, governments have not come to the industry with financial aid. And what do we see the prospects for survival of airlines in each of those markets without government aid?
Yeah, I think it's very difficult. I mean, we've seen, certainly in the case of Latin America, where there has been very little aid from governments, we've seen substantial airlines that previously had been performing pretty well have gone into bankruptcy or restructuring under bankruptcy protection. I think we're likely to see, more of that. Although, certainly in markets like Latin America and to some extent India as well, we are seeing traffic now starting to rise. It's disappointingly slow, but with the introduction of testing regimes for international travel in Latin America, that is starting to stimulate travel. So the market situation is starting to get better. The question will be will airlines in those regions have enough cash to last until the market strengthens to the point where it's profitable? And as you saw from some of the earlier charts, we don't think that's going to be the case in many markets until later next year. We think, number of airlines might not have sufficient cash to last that long. So they're either going to have to raise more cash, in the absence of government aid, raise more cash from the markets if they can, or they face a very difficult future.
Okay, thanks, Brian. We have another question on government support. And it's saying, or it's asking, there are different types of government support. So in some cases, furlough financing schemes. In other cases, direct cash injections. So the question, I guess, has several parts. One is, what is the most effective form of this aid? And what are we asking governments to consider going forward in terms of how they provide assistance?
Yes. I think clearly all of the cash that so far this year, the 173 billion, have kept airlines alive. But the challenge is new now in that the airlines are trying to restart operations, and they're finding that traffic levels are just too low to make that economically, financially viable on many, if not most routes beyond a certain level. So we need governments to support air services. Now, wage subsidies have formed a really important and very substantial support in doing that. But I think some governments have looked to support the viability of connectivity of air services supporting their countries and have offered things like route subsidies. They have been providing support for passengers linked to tourism packages. It's stimulating demand, it's stimulating the market and helping airlines not to burn through too much cash in putting those services on. That's the sort of support that's needed.
Okay. Thanks. We have about 10 minutes left and a few questions in the queue, so we'll try and get to them, to as many of them as we can. We have a question that asks, if the changes we're seeing in how airlines do business as a result of this crisis will lead to a further blurring of the lines between the different business models in the industry, particularly the LCCs and the full-service carriers?
I think we've already seen that happen, haven't we? I mean, I think we already saw that happen before the crisis, where we've seen airline groups set up the type of business model that supports the markets and the market segments that they serve. And a low-cost point-to-point would serve one city pair with leisure travellers much more than the range of business destinations that are needed in a major city, which is a sort of hub operation which would be much more successful at. So I think we have already seen a blurring of the lines, and we've seen some former point-to-point airlines taking on connecting passengers. The COVID-19, will that accelerate that? I think it will certainly mean that airlines have really got to focus their business models on what's going to generate cash. The next 12 months is going to be all about having cash positive flights and generating enough cash to start paying down the debt that airlines have accumulated. So that means a razor sharp focus on those airlines on the right sort of business model for the market. And I think that means that many of the secondary hubs and possibly secondary bases won't make that mark.
We have a couple questions around potential for airline failures and failures to date. So the questions are basically saying, do we see certain regions of the world being more vulnerable to airline failure in the future, or in terms of performance up until now as well?
Yeah. Yes, I mean, we've seen limited, we've seen about 50. Obviously that's 50 too many. But it's been in the regions where we've seen limited government aid to a large extent. The larger failures, or at least the restructuring under bankruptcy protection that we've seen, has been in Latin America. And I think that looking into the next 12 months, where we're starting to see vaccine distribution, we think that's likely, or we'll at least see those sort of more widespread vaccination in the developed markets. Well, I'm sure there's going to be attempts to have a fair distribution of the vaccine, but I think inevitably cold storage issues and other issues will mean that the developed markets will probably see a stronger return to travel first. So I think there's probably more vulnerability in some of the emerging markets, particularly as governments in those regions probably have less resources to support their airlines. And we've actually not seen airlines in those regions supporting airlines to date. So I think that is probably where the vulnerability is.
Okay, thank you. We have another question talking about the debt burden. So it's two parts. The first part is, how long do you think it will take for airlines to pay debt down to more manageable levels? And the second part of the question is, are there long-term consequences of having taken on so much debt?
Yeah, debt has gone up 220 billion. It's gone up more than 50%. Airlines have got to generate free cash flow to be able to pay that down. So they need to, their profits need to be sufficient, both to service that debt, pay for any renewal of their fleet, and have money left over to pay that down. $220 billion of extra debt is going to take years to repay. One way out of that is raising equity, either from the capital markets or from governments, which could pay that debt down. But I think it's going to take time. The consequence of that is that it gives airlines much less resource, both to reward investors, but also to invest in new aircraft. So it's going to certainly slow down expansion, possibly slow down fleet renewal. There's certainly a risk of that.
Okay. We have a question about additional costs. So there are lots of measures that airlines are taking in order to fly safely amid the crisis, and some of those measures may extend beyond the crisis. So the question is, are we worried about costs on things like extended turnaround times, And how do we see those impacting the industry in the long term?
Yes, I think a big worry, and we saw this after 9/11, was that the measures put in place to deal with the crisis sometimes never disappear. We're still having to take our shoes off to go through some airports all these years later, and so I think the concern is that the health protocols, the measures put in place to deal with the coronavirus, shouldn't cause problems for the passenger, shouldn't cause problems for efficient operations for longer than they have to. But certainly, at the moment, we have seen issues with turnaround times which have not helped with airlines getting their unit costs down. I guess, though, what I would say is that certainly looking this year and next year, the biggest impact on unit costs has been from the collapse, the grounding of capacity. Because with the fixed cost element, there have just been so fewer flights and seats to spread those costs over. So the resumption of operations now and into 2021 will help bring those unit costs down.
Okay, we have time for one, maybe two more questions. There's a question on the Middle East hubs and how do we see their model of long-haul connections faring through the crisis?
Well, I think that the super connectors over the Gulf, have been very successful in the past, and it's proved to be, a very efficient, very efficient hubs. I think the challenge that particular region faces at the moment is that the long-haul markets, have been slow to recover, and in particular with vaccine distribution, it might be that some of the emerging market ends of those long-haul routes are even slower to recover. So I think that will be a challenge. Offsetting that, of course, is the proactive efforts of governments and airlines in that region to put in place testing regimes.
Okay, thank you, Brian. We have time for, I think, one more question, and then we'll have to call this briefing to an end because we all need to reconnect to the AGM system. But there are a few questions in the queue. I've tried to isolate the questions in the queue that are more associated with the outlook, which Brian's our expert on. We have quite a few on vaccine policies and will vaccines be required for passengers, what types of vaccines, etc. At the conclusion of the AGM, we will have a press conference that will feature our Director General as well as several key industry CEOs. If you would be kind enough to bring those questions into that press briefing, I think they're more in a position to be able to answer those policy-related questions. And so we've concentrated with these questions on Brian about the mechanics of the outlook. And the one last question that I'll pose comes from China. And it asks about the strength of the Chinese domestic market and whether that might allow Chinese carriers to be profitable in 2021. And also whether or not, I suppose it's incentives in the Chinese market in terms of all-you-can-fly type of promotions might distort the appetite or the way in which people travel.
Well, firstly, yes, the recovery of the Chinese domestic market and the relative strength of the Chinese economy when we look around the world has certainly meant that Chinese airlines already have improved their financial performance very substantially. So we are expecting that airlines in China would be profitable in 2021. Not in the whole Asia-Pacific region, and we certainly see issues for Chinese airlines with their international businesses But I think the domestic markets are sufficient to move those airlines into profitability. As for the schemes that governments are introducing to support air travel, there's obviously a danger that these can distort behaviour. But I think we would see these as a temporary fix, but an important fix at the moment for the lack of passenger confidence. We've seen this in passenger surveys. Passengers are still very nervous about travelling, perhaps not because of the in-flight risk, which is very low, but uncertainty at each end. And I think additional measures like these measures to encourage travel certainly are necessary, and we would certainly encourage those over the next year.
Okay, great. Thank you very much, Brian. I think we'll call this briefing to a conclusion now.